Hello and welcome to Pro Trader Strategies for Valentine's Day, Friday, the February 14th. My name's Eric Wilkinson, and yes, you very well may recognize me from mainstream media as the Wolfman, where I've talked about everything from economic to geopolitical and market analysis. Well, I do about the same thing in these daily market commentaries. I talk about the economic data, the geopolitical environment, and then how that is going to impact the overall markets with my analysis. So, without further ado, I layer on some option strategies in and around that I have specific rules that I teach in webinars on how to set these things up to increase your probabilities of success. But please remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, with that out of the way, let's get it on with some economic data across the pond. We got some preliminary GDP numbers out of Germany, and that came in at unchanged, expected to be a positive 0.1, so a little bit lower than expected there. Then we've got the European flash GDP coming in at 0.1%, which was in line with expectations. European flash employment change came in better than expected at 0.3%, expected to be 0.1%. Now let's move back over here to the United States. We got some good economic data out of our region, and that was in the form of core retail sales, which, remember, that number wasn't looking too good before, but it came in line with expectations at 0.3%, albeit they did revise last month's number down by 0.1%. Retail sales coming in at 0.3%, expected to be 0.3%, and again revised that number down by 0.1%. So it looks like when we're talking about core retail sales, which strips out autos because it's a little bit more volatile, that autos number, which actually was a much better than expected number last month, is what was revised in these numbers there. And then we got industrial production coming in at negative 0.3%, expected to be negative 0.2%, and they revised last month's number down by 0.1%. So missing on that headline number and on the revision. But capacity utilization staying in lock at 76.8%. Last month, remember, it was 77%. Business inventories came in line with expectations at 0.1%. Now we get on to the University of Michigan consumer sentiment. That came in at 100.9, expected to be 99.5, so the consumer very confident, and they revised last month's number up slightly by 0.7%. So nice number there in the University of Michigan consumer sentiment. And then inflation expectations coming in line with expectations at 2.5%. We do have a Fed governor speaking later on today, Mester, and I doubt that that's going to be very much market moving. All right, now coronavirus, we got to talk about this because it just seems like that's what's really driving the markets these days. It seems that China revised their numbers back down again after having the spike yesterday, saying that some people were double counted, or some of these infected people, and the death was double counted. So they revised those numbers down a little bit. Anyway, on to the overall markets. We've got crude oil moving higher today by about 63 cents, trying to get back up into that value area. I talked about this. I don't think below 50 is very sustainable. We did dip down there a couple of times this week, and now we're starting to move back up into the value area where the time and volume has been spent. About 70% of that has been spent. And I think, in that mid-range of the 50s is the real sweet spot for crude oil right now, unless we start seeing some real traction in the global economies and here in the United States, which I think we're going to kind of sputter along here for the foreseeable future, to be quite honest. All right, we've got gold futures moving higher again today. Yesterday and today, we're seeing some weakness in the equities. Yeah, we have seen highs, but they started seeing some weakness, and I think people are putting money to work into gold going into the long weekend. Bonds moving higher today by 21 ticks, still in that mid-range 162 handle. We're starting to build up a volume node there. You can see we might see a shift here higher with the volume taking place right in and around this area. Fed fund futures pricing in I think a November rate cut still. So that's causing the yield curve to kind of flatten out here. So long term, looks like interest rates are going to remain low at this point in time. All right, VIX still in the teens, trying to hold on to 14, just below that right now, but you can see we are off just by about 20 ticks. And that's despite the fact that we're seeing equities across the board. A little bit of a mixed bag and pretty close to unchanged at this point, as you can see with the Dow Jones Industrial Average off by 10 points right now. And then we get the NASDAQ moving higher right now at this point anyway in the day, up 14 ticks on the day, creating a new all-time high in the NASDAQ and in the E-mini S&Ps. Despite we're unchanged here in the E-mini S&Ps. Let's take a look at the breakdown of the E-mini S&Ps on the 30-minute chart. Let me pull that up. You can see that all-time high created overnight here and in the NASDAQ. Overnight inventory was long. They flushed those guys out on the open. Some of this positive was the Chinese saying that they revised some of those numbers back down again. We're still seeing a little bit of weakness going on in the overall markets. Now we're moving into positive territory with the equities, but really starting to quiet down heading into this holiday season. So I don't expect a whole lot of change in and around that. All right, let's talk about some trades that I've done or haven't done. I was talking about, getting sick of eBay, but today we got a little bit of a boost higher today, almost by $1, trading around $38, which, if you guys remember, I've lowered my cost basis on this. I got long at 37 a couple of earning cycles ago, and I've continued to lower my basis. Now I am kind of holding on to this. It looks like we're starting to make a move. I thought we were going to kind of trickle in and around this point of control, which is just slightly higher than where my break even is on this trade with all the credits that I've collected on, covered calls, selling some puts and covering some trades and stuff like that. So I'm holding on to this at this point anyway in the day. I'm liking this market action now. It looks like we're going to go up and test that value area high, but anything close to 40, I'm going to look to cover that. Those were the pops that we saw when the ICE was looking to buy eBay. All right, I don't know why I have a Tesla trade up here. I want to go to NVDA. Let's check that out. This is the earnings trade I tweeted out yesterday that I was selling some puts in, and I went into the March. I did this like right before the webinar, so I didn't go into the weeklies. Plus, I like the price location of the 160 handle there. So I went into the 140 handle, and in the weeklies, I would have had to go to the 160 handle. So I wanted to get a little bit lower. Right here, we're looking at the Fibonacci, the 50 Fibonacci, trading 142.13, right? So I picked the 140 handle, which is just slightly below that. I figured I had a couple of support levels there by picking this strike location, and went in and sold those March 240 puts in there for $3.40. Today, obviously, nice move higher, beat on earnings, forward guidance looked really good. They talked about the AI part of the sector really doing well, which is artificial intelligence. That is something that is key to NVIDIA's product. Obviously, they are the gold standard, if you will, for the chip makers. So NVIDIA moving higher and the video cards, which is, with Bitcoin being at 10,000 or in and around that area, this is a major component of those, the software that, or not software, the hardware that goes into the Bitcoin mining. All right, so anyway, sold those for $3.40, bought them back this morning for 95 cents. Obviously, we are a little bit higher here. I think the last I checked, it was trading around 70 cents. So location on this, I got out right like what I talk about in the morning. So you can see in the morning, it was a bit of a consolidation. It did make that pop for the overnight highs after the earnings result. But I got out right around in this area here. And then we got the pop a little bit later on in the day. So at this point, I think you can cover it a little bit better than where I probably did. But my rules are that on those winners, I'm getting out right off the open. So that's what I did. We got that volatility crush, directional move in my favor. All those things worked out nicely. All right, that's about it. Check out yesterday's webinar on the short put spread, dollar cost averaging. It's a way to limit your risk if you want to add something avoid those black swan events when you're trying to dollar cost average with this short put spread. And I talk about all the rules around implementing that into your portfolio so that you can add for long terms. If you wanted to add something to an existing portfolio that maybe, say for instance, you got Microsoft on, which is why I added that trade yesterday. I wanted to maybe add some Microsoft to my portfolio if I got my good strike location, which is why we set those up. Kind of like how I'm building out my portfolio for this series. Still doing some other little trades in and around that, like this earnings trade. So staying to my roots, but I am adding more stuff to my portfolio for a longer duration as well. So check that out at protraderstrategies.com. Have a great weekend and give your Valentine something nice. Happy Valentine's Day. If you can't take that, take it easy.